Things are really interesting in the mortgage space at the moment. So far in 2023, we've seen one of the banks offer an extra low interest rate for a very short period of time to try and entice customers to move their lending across to them. We've then seen all of the other banks counter offer this with special low interest rates to try and retain their customers. We've seen cash incentives being offered by some of the banks to try and entice customers to move their lending to them, and then also some of the banks offering retainer cash for clients to stay with them. When you have a mortgage and you're seeing all of these things going on with all of the different lenders, it can be a little bit overwhelming and it can be really hard to know what to do with your mortgage. In today's video, I'll be discussing the difference between refixing your mortgage versus refinancing your mortgage, and discussing things that you should be thinking about before making a decision on what to do. So first up, let's look at refixing. Refixing your loan means that you stay with your current lender and you're refixing your mortgage interest rate that is expiring with one of the new interest rates that are on offer. You can choose to refix for 6 months, 12 months, 18 months, 2 years, 3 years, 4 years, or 5 years. The interest rates on offer will usually vary between the different time periods, but sometimes they're also the same. When you refix your mortgage, you're agreeing to stay with your lender on the agreed interest rate for the agreed time period in exchange for them providing you with your mortgage. When you refinance your loan, you repay the mortgage with your existing lender and replace it with a new loan with a new lender. One typical reason for refinancing is that your new lender is offering some kind of incentive for you to move your lending across to them. This could be something like a cash incentive or a lower interest rate, for example. When you're refinancing your loan, this is also a really great opportunity to restructure your mortgage to ensure that it aligns with your goals and financial position. This is when it can be really important to engage with an experienced mortgage advisor who can assist you with this process and ensure that your mortgage is set up best for you. So there are a few important things that you should think about when your loan is up for renewal and you're deciding whether to refinance to a new lender or refix and stay with your existing lender. The first thing to think about is, what is your reason for wanting to move lenders? What is on offer and what are you going to get out of refinancing your loan? A good mortgage advisor is usually across all of the different lenders' deals and offerings and will be able to assist you in selecting a new loan provider. The next thing that you need to think about and look into is, are you under any obligation to stay with your existing lender? What I mean by this is, maybe when you took out your lending, you received some kind of cash back. This usually comes with terms and conditions that you need to stay with your existing lender for a specific time period. And if you decide to refinance to a new lender or you repay your mortgage in full, you need to pay some or all of that cash back. If you're unsure if you may owe any cash back, give your lender a call and ask. They'll be able to advise how much you may need to repay if you decided to move to a new lender. You should also ask if any break fees may be incurred. If you're working with a mortgage advisor, they'll be able to contact your existing lender and find out for you if any break fees may apply and also if any cash may need to be repaid back. If you're under an obligation to repay cash back and may incur break fees as a result of leaving your existing lender, you'll need to weigh up the costs of these compared to what is on offer with the new potential lender and whether this is worth refinancing for. Another thing to note about refinancing is that you'll need to engage a solicitor to help facilitate the process and also sign new loan documents with. So you'll need to factor in legal fees. Before deciding to refinance, you should also take a look at your overall mortgage. If this is split in 2 or more portions, for example, let's say a $500,000 mortgage is split into $200,000 fixed for 1 year and $300,000 fixed for 2 years. If your 1 year portion is up for renewal, that would mean that your 2 year portion is fixed for another year. Now, I already mentioned the potential break fees if you were to refinance your loan at this point in time. You would be breaking the $300,000 fixed term by 1 year, so it is best to check at this point if any break fees may be incurred before you make any decisions. Something else to think about and consider is Is this $300,000 portion actually fixed on a really good low interest rate and worth keeping on this low rate for another year to make the most of the lower repayments? If so, it may be worth refixing your $200,000 portion so that you're making the most of the lower interest rate that you have on your $300,000 portion. There are many factors that come into play, and deciding whether to refix or refinance your mortgage can be quite an overwhelming decision to make. Please engage an experienced mortgage advisor to assist you, provide you with advice, and help you make a fully informed decision. If you'd like to discuss your personal mortgage and personal situation, please feel free to reach out and I would be happy to assist you. As always, if you like this video, don't forget to like and subscribe. I really do appreciate it and it helps my channel to grow. Thank you so much for watching, and I'll see you in the next one.